Hey, welcome investors to the 40 Finance channel. My name's Jeff Beers. Today I'm going to look at 3 of the hottest tech stocks from 2020 so far, the big climbers. We're going to look ahead a little bit to 2021 and try to figure out if there's any value left in these picks when you consider the future earnings. Obviously, the goal of any growth stock is to try to get in now when earnings are expensive, so to speak, so that the price you pay today will actually be much less per earnings going forward. Reminder as always that my stock picks and projections, they're just my opinion for your entertainment. Please talk to an investment professional before taking on the risks of the stock market. However, if you enjoy stock market analysis and personal finance videos like these, then please subscribe to the 40 Finance channel. I post here 3 or 4 times every single week, so make sure you subscribe to keep up with all the new videos. And finally, if you're interested in joining my email list, see the link in the description to get my free 15-minute stock analysis report when you sign up. It's a great report with tons of free resources to help you analyze stocks quickly and more effectively. All right, so the goal of today's video is to look at these 3 hot tech stocks: FSLY, DocuSign, and Crowdstrike. All 3 of these names were huge winners in 2020, and they have a lot of momentum in the market today. So we're going to try to project out to 2021 to see what does their stock price today mean when we look ahead to 2021's earnings. All 3 of these companies are projected to be profitable by the end of fiscal year 2021. So it'll be interesting to see how today's price stacks up with future earnings. All right, first stock on the board today is FSLY. And FSLY sits in this edge cloud computing platform that basically makes apps and websites process more quickly for users. In today's world of websites and apps, speed is everything, and that's exactly what FSLY helps these companies do. It's always frustrating, of course, when we click a button or whatever and nothing happens. And the best apps, of course, are running very efficiently. Same goes for websites too, whether it's just browsing through articles or actually making a purchase. Speed is everything in this new game, and that's where FSLY is focused on. All right, quick review of the stock of where it is today. Got a price of $96.71. You see in the highlighted boxes, no PE ratio today. However, there is profitability in the future. And the EPS today sits at negative 55 cents. 52-week range on this one, all the way down at $10.63 and up as high as $117. You look at the year-to-date chart on the far right, and you can see that 2020 has been an outstanding year for FSLY. If I had to guess, looking at the graph, they were probably in the $20-ish range around January. And then, of course, they had a lot of growth and success heading into the year, likely as more and more technology companies needed their services. At the top of the board, you can see trailing 12 months revenue of $246 million. So not a very large company from a revenue standpoint when you consider their market cap's at $10 billion. However, as we know, this is a growth stock, so we're trying to get in early on growth in the future. Cash on hand of $384 million. Debt load of $30 million, not a lot to be concerned with there. All right, so in order to get a feel for which way FSLY's heading and how much we're paying today for tomorrow's earnings, we're going to look at the analyst projections for EPS and try to rope that back into a PE number to give us an idea of where things are headed. All right, and on FSLY's screen, you can see in the yellow box this current fiscal year of 2020, they're expected to land at minus 3 cents for EPS this year. That's actually up pretty significantly from their trailing 12 months EPS of negative 55 cents. Then you look ahead to next fiscal year of 2021, and you have a current estimate from analysts that they will actually eke out a profit of 4 cents per share. If you take the 4 cents per share and roll it back into today's price of $96, you have a PE of 2,400 right now. All right, so a PE ratio of 2,400 is obviously pretty high by today's standards. However, I think some of the bonus for FSLY is that they are growing quickly and they are reaching profitability if everything goes as planned in fiscal year 2021. Now let's take a look at what the top performing analysts are calling for out of FSLY over the next 12 months using the TipRanks dashboard. Okay, if you watch my other videos, you know that when I use TipRanks, I always sort by the best performing analysts, thus the 4 and 5 star faces you see over there, and I also chop out old ratings so that we can keep with the freshest information. If you look off to the right, FSLY doesn't have a lot of analysts following it right now in the 4 and 5 star category, so there are a couple what I would call older ones at the bottom that are 2 months old. Everything else is pretty fresh. You can see from the ratings that we have 1 sell, 3 buys, 2 holds, and price targets ranging between about $88 and $110. So depending on which side of the case you stand on, that's a minus 9% price performance from today, or all the way up to 110, which would be plus 13% from today. All right, next on the board is DocuSign. And DocuSign's a company, I think if you work in corporate or have signed any contracts lately, you've likely run into it. It's basically a new way to get signatures online through PDF functionality, certified signatures, fantastic software, and certainly saves us all a lot of time. And I can't even imagine anyone who's running contracts, sales orders, legal docs, medical docs, why they wouldn't use DocuSign. And the need for such services has certainly seen an uptick in 2020 as DocuSign has performed very well this year. All right, looking at the stock price today at $222.45. You got PE ratio and EPS in the negatives again here just through the trailing 12 months. 52-week range on this one was all the way down to $60 and has ramped up as high as $290. So we're actually coming off a pretty big spike from $290 down to $222. You can see the year-to-date chart off to the right coincides very well with the lockdown and pandemic shift in not only consumer behavior, but I would say, management behavior on needing to turn online for new tools. Up at the top of the board, you got trailing 12 months revenue of $1.6 billion. Cash on hand of about $675 million and debt load of $687 million. I think again, when you factor in cash and the amount of revenue coming in, I'm not super worried about that debt load. All right, let's take a look at the EPS trends for DocuSign. They are expected, at least according to analysts, to go profitable this year. Important to call out that their current fiscal year is labeled 2021. That's because it ends in January of 2021 as opposed to December of 2020. So when we look ahead to next year, you can see that we're really talking about January of 2022. Long story short, though, the current estimate for the fiscal year comes in at 57 cents. Which is a great uptick from where we're at today. If you roll that 57 cents into a price of $239, you got a PE there of $419 for this fiscal year when it ends in January. Price today is actually $222, so I don't know why I have $239 there, but that would be a pretty minor update, probably in the neighborhood of the 390s for a PE. And then if you go to the orange box right off to the right, analysts have them coming in at 93 cents as the early EPS estimate for January of 22. You roll that into the price of $239 and you get a PE of $256. All right, so for DocuSign, I think you see some positive signs there. You got that PE today in the neighborhood of 400 for this fiscal year. That drops to the 250 range for next fiscal year. So you're definitely making progress. And I would say compared to FSLY, the returns on DocuSign as far as getting into that next level of growth, DocuSign's much further along, and the price that you pay today is probably going to pay off sooner with a company like DocuSign. Let's take a look at what the TipRanks analysts think about DocuSign over the next 12 months. All right, DocuSign, much bigger company, so many more analysts are following it. And you see, just roughly eyeballing, I'm going to say that we've got 5 or 6 buys and about the same amount of holds. And when we look at the price targets, you can see anywhere from plus 5% over the next 12 months, all the way up. You've got one person, Merrill Lynch, there at 300. That's plus 34% from today. So it does look like DocuSign has some positive signs as far as providing some ROI. I would certainly argue that it has more upside today at its current price than FSLY has. All right, last stock on the board today is Crowdstrike Holdings. Crowdstrike is essentially a security company, cybersecurity company that protects the endpoints for IT applications. Endpoints being publicly accessible points into an IT world. So if you think about a website or an app, we've talked about that before. Also database logins, back-end login pages, all those things. That's where Crowdstrike is helping companies against attacks on their systems. Price today of $144.68. This is yet another one that is not yet profitable, and we'll dig into that in a second. You got a 52-week range of about $32 all the way up to $153. It's back down from that high a little bit to land at $144 as of today. You can see once again on the year-to-date chart, this one came out of the gate in January in and around the $60 mark and has been very good to investors because we are over 100% return as of today. Looking at the top of the screen, you got trailing 12 months revenue of $650 million, cash on hand of $1 billion, and a minuscule debt load of only $45 million. So a lot of health there in that balance sheet and a lot of room to potentially acquire or develop more applications for this company. Crowdstrike is another one where fiscal year ends in January, so it sort of makes the years look a little goofy. But the current year, which ends in January of 2021, has a current EPS estimate of 5 cents. So they are getting into profitability here over the next few months. If you plug that in today's price of $144, you got a PE of almost 2,900. However, if you start looking ahead even further, call it, 13 some odd months into next year, January of 2022, that EPS goes up to 25 cents per share. And you throw that into today's price, and that 2,800 PE drops down to a PE of 576. All right, so once again with Crowdstrike, we're seeing massive progress in those PEs coming down. So very expensive as of today. But if you think that you're going to hold for 3 to 5 years, then you only really have to look into, January of 22 for your PE to come down, whatever that was, 75 some odd percent to land in the 500s. Let's see what the tip ranks analysts think about Crowdstrike. All right, we got some fresh ratings for Crowdstrike here. Everything is no more than a month old, and the two at the top there are 7 and 8 days ago. We've got 1, 2, 3, 4, 5 buys, 3 holds, and it does look like there's some sentiment that we might be reaching the top of the price point for this stock. You can see on the upside downside part, you've got a few price projections in that 125 to 140 range. Those would be net negative from today's buying price. You do have a couple others that go all the way up to 160. That would give you 10%. At least for me, when I look at this board, I would say if you are not an existing Crowdstrike holder, you may want to wait for the next market dip to try to get some more padding in there for a longer 3 to 5 year hold. All right, guys, so that's a look at 3 of the hottest tech stocks today and trying to project what the future holds in terms of EPS and potentially PEs. Hope you guys like this. Let me know out of these 3 stocks which ones you might be interested in. Leave a comment below. Don't forget to sign up for the email newsletter so that you can get your free copy of the 15-minute stock analysis guide. And of course, give me a like and subscribe if you enjoyed this content. We'll see you on the next video.